The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
So I was a little cheeky for the stock of the day today. I mean, I could have done CBA record heights. I could have done one of the gold miners because they're leading the market by percentage points higher. Like 360, we know Adam likes it.
Oh, what a beautiful stock.
But I thought I would put the stock of the day in the small end of the market, Appen. So Appen shares going gangbusters after it upgraded its guidance. We like guidance upgrades in this environment, telling shareholders it's expecting FY25 revenue to rise as much as 11% to between $235 to $260 million. It sees China as a key growth driver for the company. Revenue from China rising just over 70% in 2024. That year, Appen recorded a $20 million loss, which was an improvement, and it's still working toward profitability. So up by close to 24% today. So Adam Dawes from Shaw & Partners, You will recall this was one of the much lauded wax stocks, if you recall.
Certainly do.
Very big fall from grace.
Yes.
But is Appen pulling its socks up?
It does look like that, doesn't it? And I've just pulled a couple of the slides from the presentation because, as always with these presentations, you always flick right to the back and look for the outlook because really it's just that's what we need to do. And that outlook certainly looks good. And as you said, China, that success has continued with that 70% growth from last year. They're generating a lot of revenue growth from their AI, and that's definitely a major driver for the revenue. The EBITDA is improving and costs remain in control. How about a great sentence there? Markets love that. High EBITDA improving and costs remain under control. And as always, the guidance, they've gone fairly bullish on that guidance. And that's why I think the market is really gravitating to this one, and certainly looking at that revenue between 235 to 260 mil. Looks pretty good. But on a long-term chart, it's got a long, long way to go.
Yeah. So this is obviously risky, but could it be a bit of a specky buy, or do you really need to think long and hard about its product, which...
The product mix has changed because I actually went in and had a look at the product mix from what it used to be. Remember when we used to talk about this stock and it was all about the capture and all of that sort of stuff, and now it's really moved into that AI modelling, and that's really driven the growth going forward. So the change in the mix of the business I think looks okay. I'm still not sold, certainly because this business has had so many false starts and only now. But then if you look at our tech universe, there's not much to pick from that's got real good value in it. I mean, we saw Xero yesterday, we've seen Technology One, we've seen all the normal ones that have just, shot the lights out. So potentially this is one that you can then start to get stuck into, and hopefully it starts. I'm going to say it's a hold from me due to the fact that I need to do more work on it and get more of an understanding of the business. But I think it's looking really promising. And because it's one of the only other tech stocks, there's plenty of tech stocks, but this one has really been beaten up, and so maybe there is some value inside this stock at the moment.
So hold for now, but watch this space.
Yeah, it'll be a buy to a close to a, it'll be a hold close to a buy. I just need to do some more work on it.
Mark, buy, hold, sell today for Appen.
Today, I'd be selling into this for sure, but I will be a bit more positive on it. The strategic priorities for 2025, if they can execute that, then they're going to be okay. If they don't execute that, I think this company's dead in the water long term. So essentially where their main business model was tagging, but they've been a victim of the fact that the thing they were tagging for now does the job for them.
Yep.
So, and it's 1 cent a query. So their advantage was that they went to the Philippines and India, and they were leveraging that cheap labour. But computers are, I think, basically around about 160 times cheaper.
Yeah.
So, and it's only going to get better. So they've really lost that advantage. And in the past, everyone flags that if you Google AI stocks, Appen comes up every time. Until this release, they're not. That is just a false description. They weren't an AI company. They were tagging to help AI models, but the companies they were providing that service to were AI companies, but not them. But They're continuing to invest in automation and prototyping and testing the large language models. If they can pull that off, then I'll be interested in this stock. And I think the guidance is extraordinarily bullish. But you just got to think about, they made $3.5 million profit, and I think they're well over $300 billion market cap. Like, that definitely has to. And if they keep relying on the old model, I think this goes to zero, basically. I think they're in a hell of a lot of trouble because, they've lost their big customers as well. So worth keeping an eye on because they are going in the right direction. They have changed their business model. I'd be selling and waiting to see how they go next update and keeping a really close eye on the updates because there could be a lot of upside in it if they do pull that off. Okay,
we're going to be watching Appen very closely. That was the stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.